I'm going to give you a very brief introduction to Gold Resource Corp. It's a company that perhaps not many of you know. It's a producer. The reason you may not know it is we're an American company. Head office is in Denver. We're New York American listed. We are a junior company. We do fit into this mold, and we are very much focused on growing the company. Effectively, about 2 years ago, we had a major transition in the company. We have a new board, new management team, and a completely new focus. We are a precious metal producer. However, we've got very significant base metal credits from our mine in Mexico. Balance sheet is strong, no debt, directionally 20 to 30 million in cash, and good operating cash flow. We have, and this is what has set us apart a little bit from our peer group, we have paid dividends consistently over a number of years and continue to do so. We do have a pipeline of projects, and I'll get into the most critical one in a few minutes. Any company is driven by its team, and we have actually been very fortunate in putting together a team that, from my perspective, punches much beyond its weight class. We've got very strong technical, both in terms of mining, metallurgy, geology, very strong financial bench strength, and it enables us to look at things that a lot of companies can't. We are, of course, and this is a bit of a pet peeve of mine, ESG is not new. If we don't have our social license, we don't operate. If we don't respect it and be good stewards of the environment, we don't operate. We've been doing so, and we continue to do so. What we have failed to do is report appropriately, and that will be remedied by the end of the year when we publish our first sustainability report. Two primary properties at this point. We've got the Don David mine in Mexico, and we've got the Back 40 development project in the Upper Peninsula of Michigan. Directionally, this is what we're looking at going forward. Everything is subject to change, but given what we've got on our plate right now, that's what we're looking at. DDGM, Don David, is located in Oaxaca. We have directionally about 55 contiguous kilometers of concessions along a highly mineralized belt. The mine is epithermal. We're mining underground, 2 vein swarms. To the left, you see the original Arista vein swarm. To the right, switchback. It's high grade on a relative basis. It's polymetallic. We get directionally 40% of our revenue from precious metal and 60% of our, in today's world, 60% from base metal. Primarily zinc, although we get good copper and good lead credits. Mining is technically challenging. It's not for the faint of heart. These are narrow vein deposits. In some of the wider veins, we're able to utilize long hole stoping. In the majority of the veins, we're actually doing cut and fill. Narrow vein, we define that as anywhere from about half a meter is our cutoff. We can't mine economically anything any smaller than that, and then we go up to, in one area in the switchback, we were mining 40-meter stopes. Currently, we've got directionally 5 to 6 years ahead of us, and it gets a bit fuzzy because that includes inferred resource. And we lose every time you upgrade, you're going to lose a certain percent of your resource. We are spending a great deal of effort, time, and money on exploration. We took over the company 2 years ago. It was January 1, 2021. So this team, as it's currently constituted, has been involved for 24 months or less, but you can see what our focus has been. We are very much focused on exploration. You can see that blue line trending off to the right. What that represents is a development drift that we're driving underground. And the faint blue lines are the proposed drill holes. It's obvious from that where we see the future of the mine being. You see that small blob, and it's not exactly a technical term, between the two larger vein swarms. That's known as the Three Sisters. That's a discovery we made last year, and we've not yet been able to drill it off because we had to put in place the exploration development to be able to drill down and below. I'm happy to say that we actually started the first drill hole into Arista just last week. I don't have any update yet, but we're cautiously optimistic. That could be a very significant discovery. Additionally, below Switchback, we've had some very interesting intercepts as well. So we're very encouraged by our infill drilling program. Processing capability. We've got really two discrete streams. We've got a conventional sulfide producing 3 cons, copper, lead, and zinc. And then we've got a leach circuit that produces a doré product. Combined capacity is nominally about 1,800 tons a day. We're currently running at about 15, and that's driven by geology. Second asset we have is up in the Upper Peninsula of Michigan. Back 40 project was formerly owned by a company called Aquila Resources. We acquired Aquila early December of last year, and since then have been moving forward with the feasibility study. I would love to be able to tell you that we're going to be releasing the feasibility study this quarter. It's not happening. We've concluded a lot of the basic engineering. What we're looking at now is alternative analysis to bolster the net asset value. That entails potentially some additional met testing. This is a VMS, polymetallic VMS, gold rich. Directionally, it's 50% gold, 40% zinc, and the balance is made up of copper and silver. But because the metallurgy is complex, we're very much focused on doing two things: improving the recovery of zinc and gold and reducing reagent cost. I don't think it's going to come as a surprise to anybody in this room, but we're in an environment where it's very, very difficult to firm up your capital cost estimate because any quote you get is good for 24 hours. I'm going to give you a bit of an example of what the industry is facing when it comes to building new mines today. We went to get a quote just on a leach tank, the very basic structure, and our metallurgist had received a quote for an identical tank in 2018. Went back to the same supplier, the same spec, and the cost had gone up by 42% in the intervening 4 years. I can't give you any real idea when that cost increase took place, but I would postulate that it's probably all within the last 2 years. There was some increase in 2019, 2020, but it's the last 2 years that have driven that inflationary increase. We're seeing that across the board. Whether it's any equipment supply, we're seeing that kind of impact. In Mexico, we're seeing it in terms of reagent supply, consumable supply. Grinding media has gone up 39% in the last year and a half. I'm giving you all of this background to say that I'm in no damned hurry to produce a feasibility study today. I think we're living in unusual times. Hopefully they're unusual times. And the economics of this project are, while being solid, I think are being adversely impacted by, it's hyperinflationary isn't the term, but very strong inflationary environment. Personally, I expect to see steel come down over the next year or two. Steel is a major driver in new mine construction. So really what we're going to end up doing is we will produce a study. That study will be used for permitting, and our permitting application process is well down the road. hopefully by the end of Q1, we'll be in a position to put in our permit applications to the permitting body within Michigan. Michigan is a little bit unique in the United States. There are only 2 states that control the permitting process for new mining projects, Michigan and Wyoming. We've had extensive conversations with the permitting body within Michigan. We've been working very collaboratively with them. In our study, we have addressed all of the deficiencies that were identified in the previous process when this mine was first permitted. The result of that is we're very comfortable with the likelihood of getting permitted. I'm not overly concerned about that. I'm more concerned about the overall economic climate. What we're doing, the last study that was done on this contemplated a very large open pit that was very close to the river. We've shrunk the pit, we've gone underground earlier, and we're looking at even shrinking the pit further as we speak. I think this is probably going to be the configuration that we see. So you'll have open pit for years 1 through 5, followed by underground. It's a standard VMS. So as we get underground, we fully expect to be able to drill from underground and expand the resource. Is there any assurance that we'll be successful? No. But I was involved with Hudbay Minerals at one point as chairman and then CEO, and became familiar with the progress of VMS in the Greenstone Belt in northern Manitoba. And on average, the standard VMS deposit, once put into production, grows by over 30%. Some of them it's 100% and more. But the smallest I've seen is between 10 and 15%. The likelihood is we will increase this over time. As I said, we're going combined open pit, smaller pit. We're going dry stack as opposed to conventional thickened tailings. We've addressed virtually every issue that was brought up in the prior process. We've been very focused on putting money back into the ground. Our mine in Mexico has been cash starved, and as you'll see, over the last year and this year, directionally we're spending $55 million on capital. That's all funded internally. Because we pay a dividend, we're a bit of an outlier. Our current yield is about 2.5%, and what that's done is given us a very strong and loyal shareholder base. We don't have any debt. We do have some stream obligations if and when we put the Back 40 into production, but we don't have any debt. We look at we will have to raise project finance for Back 40, but that will be a very strong use of proceeds. We're generating directionally 40 to 50 million a year in operating cash flow from our mine in Mexico, and we would look to try and improve that on a go-forward basis. Currently, our plan is to maintain our quarterly dividend. I say currently. That's a capital allocation decision that we have to revisit on a regular basis. If we have other uses of cash that potentially can generate or engender greater returns to our shareholders, that is what we will do. We're not married to any one strategy or any one structure. Capital structure, 88 million shares outstanding. Market cap, depending on the day, is 140 million directionally, US. One of the anomalies about our share performance over the past 8 months, 9 or 10 months now, year to date, we're up marginally. But if you look at the index, the VanEck index, it's down 24 to 26%. If you look at a lot of our peers, they're down anywhere from 20 to 80%. Why is that? Our retail base is predominantly our shareholder base is predominantly retail. It's 70% U.S. retail, 30% mostly passive index funds. It's very sticky, very loyal, and we've been trading very well. Even in today's world, we're trading 500,000 to 600,000 shares a day. Quick summary, we are very focused on creating value. I know that a lot of companies and a lot of people want to invest in gold or copper, etc. I am fundamentally agnostic. I want this company to make money with a focus on, to the extent possible, precious metal and then laterally a base metal. Strong balance sheet, very good management team. That's the basic thesis.